Hello, everyone, and welcome to Onchain Update for the 12th of March. Now, there's never a dull moment in this industry, is there? Here we are with Silicon Valley Bank experiencing a true bank run. And whilst it's quite interesting that the market and lots of commentators and the average punter seems to be blaming Bitcoin and cryptocurrencies for this, the reality is that this bank is $200 billion odd dollars, and that makes it something on the order of about 20 times larger than FTX was, right? They were about 9-10 billion. So it gives you a bit of a sense of scale. This is a traditional finance problem. This affects a huge amount of VCs and Silicon Valley tech startups and the like. This is big news. It's quite significant. I'm still myself kind of digesting it. So certainly do listen to many of the podcasts that are out there to try and get your head around what's going on. But in terms of my big picture view, I'm just going to give you my kind of snapshot feel for what I think is a likely scenario and some of the kind of angles here, and then we'll get into the on-chain side of things and discuss some of the details of what's playing out. So look, my view is that there's kind of two banking institutions that have had a bit of a hairy day. The first one was Silvergate, which yes was quite highly concentrated in terms of their let's call it crypto company exposure. They are winding down in an orderly fashion. I believe that they've been essentially leaned on by the regulators to the point where they've basically looked at it and gone, look, what you're doing is not illegal, but it's, how about an audit every 6 months that's going to make this prohibitively expensive for you? And, oh, yeah, we're going to probe this and this and this. And Silvergate's just looked at this thing and gone, it's just not profitable to operate under this environment. So if I understand correctly, Silvergate is basically, they've already said that every depositor and every entity who's with them gets all of their money back. Silicon Valley Bank is a different story. They essentially have a duration mismatch. This means that essentially they've got a mix of cash and deposits, cash and treasuries and mortgage-backed securities. They've, as many smaller banks have done, they've gone out on the risk curve. And by risk, we're still talking about risk-free assets here, US treasuries and mortgage-backed securities. They've gone out and bought stuff longer duration. So that means if you've bought a 10-year treasury, for example, back when it was 1.6%, I think is their average yield rate. Well, rates are much higher than that right now. So if you're holding a bond that's you bought at 1.6% yield and the prevailing market rate is 5%, then you've lost capital because essentially, why would anybody buy that bond from you except at a discounted price? Now, that's fine if you hold the bond for 10 years because then you're going to get your principal back. The problem is what happens if Joe, Jane, and these other people want their cash back today. You have to sell those securities, and this is what the bank run really is. You have to sell those securities, realize the unrealized loss, and then if you run that experiment long enough or big enough, you essentially don't have the capital to cover it. So this is the situation that Silicon Valley Bank has found themselves in. They've essentially had a bank run. The real risks that I foresee is that if you're a smaller bank in the US, you essentially probably have a similar, not the same, but a similar style problem. And if you're a depositor, whether you're an individual or a company or a firm or any kind of size, why on earth would you ever take the risk that your small bank may not be FDIC insured and blah, blah, blah? So I think that the same way that there was a panic and a bank run on toilet paper back in COVID, and one person's fear becomes another person's reason to do something about it, I suspect we probably will see some chaos and a little bit of contagion in the smaller banks. I don't fall into the camp where I think this is a systemic banking financial collapse. I think that this will probably, at a technical level, at an actual financial stability level, probably get smoothed over. But that doesn't mean that the human beings out there, the public, the businesses won't panic, and this will happen anyway to some extent. I also think there's a pretty high probability that a private type actor, maybe even public, but some kind of savior will come through for Silicon Valley Bank. I would be very surprised if depositors aren't made whole. Now, why this affects us is because obviously, well, first of all, Bitcoin was designed to survive this. Self-custody and a cold card goes a long way when your bank doesn't want to give you your money. But more importantly, probably in the immediate term, is that USDC is caught in the crossfire here because they've essentially got deposits to the tune of about 3.3 billion. I think it's about 8%, if I'm not mistaken, that is tied up at SVB. Now, as I said before, I think the probability that Circle gets most, if not all of that money back is very high. I think that USDC is going to be just fine. And I think that within a week or 2 weeks, we will see the peg recover back to $1. I don't believe this is a reason to panic in that instance. What we're more looking at here is what is the kind of longer term contagion. And that's much, much harder to predict. But that's my general view. At the moment, yes, this is a very significant, a very serious issue. So it is time to be very, very cautious and just be prepared for what could happen. But I also do not fall into the camp where I think this is a systemic problem. Now, the challenge is that that could mean that in 2 weeks' time, 3 weeks' time, we're back to looking at rate hikes and all that kind of thing. So just be very mindful, be very careful. This is an extremely uncertain period of time. And very, very few people will understand or be able to predict how this plays out. So be ready to absorb all information as it comes in. So what are we going to talk about today? On the on-chain side of things, just some tools that I'm kind of tracking and trying to understand. Really, there's kind of 3 buckets: stablecoins, exchanges, and the reason why is that people who are going to react right now are going to be sending to and from exchanges, and that's going to be realizing some kind of profit and loss, telling us about their sentiment. Now, in the last video, we said that getting some kind of a negative event that stokes up the bears and creates some realized loss, I think would be something that we would want to see as long as it reverses. So we have the potential here where this thing actually could start to snowball and get kind of nasty. We also have a very, very high potential that this could actually be like a slingshot getting pulled back and the market actually rebounds positively over coming weeks/months. So I think both of these scenarios, I would almost be gut feel something on the order of about a 50% each, to be honest. So that's what I'm saying. Be prepared for all scenarios. But anyway, let's jump into the data and have a look through. Okay, so as I mentioned, we're going to start with stablecoins. I just want to give you some big picture views. I mean, at the very, very high level, if I understand correctly, USDC has paused redemptions for now because the banks are closed on the weekend. And I believe that they will, and probably they've said that they will, and I think that they will reopen on Monday. And I think that any kind of concern about USDC solvency will be solved, patched over. Even if there is a hole, it would probably be well and truly within the remit and the ability of USDC or Circle and Coinbase to cover it. So I do believe USDC will return to a $1 peg. Nevertheless, there's going to be some market impacts across the board. So in terms of the overall supply, Tether continues to push higher whilst USDC is seeing non-trivial redemptions. We have seen a non-trivial amount of redemption coming in from USDC. This is 43 down to 38. So we're talking about $5 billion. And meanwhile, our USDT supply has gone up from 71, about roughly $500 million or something of that order. So we have seen a net decline in overall stablecoin supply. This does, in my view, reflect a capital outflow, a liquidity outflow from the crypto industry. So increasing liquidity, less capital floating around. So that's just something to be aware of. That is a more bearish observation than a bullish one. If we look at this on a 30-day change, this is the total supply of all stablecoins, or the top 4, which is like 99.8% of all stablecoins. The 30-day net position change. And you can see this is basically the largest outflow from the industry we've seen really since Luna. So this is non-trivial, right? Now, whether this is a flash in the pan moment or this actually reverses back up is going to be an important one to watch. So I'm certainly tracking this one. I think this will give us a bit of insight over coming days, whether we continue to see those outflows playing out. Now, ironically enough, I mean, you can see here BUSD in yellow it's gone into redemption only mode. So BUSD is on the decline in terms of dominance. USDC has been basically sideways for some time, but we have seen some decline in recent days for obvious reasons. How funny is it that Tether just continues like the cockroach that it is to survive? I mean, every Tether truther in the world has to be just kicking himself looking at this thing being like, okay, well, Tether's going to blow up any day now, and then Luna blows up. And then, no, well, Tether's definitely going to blow up now, and then a bunch of other companies blow up. And then, oh, it's time for Tether to blow up. And here's USDC seeing, how ironic that there was actually traditional finance deposits that depegged the USDC. So very, very interesting dynamic. How this plays out in terms of the DeFi landscape, very, very hard to understand. We've noticed like MakerDAO, for example, had hard coded in USDC at $1, which is a little bit embarrassing for the protocol and the engineers and devs. But hey, what's new? And here we are where we're basically seeing that there is a systemic risk here. I mean, I don't know how much liquidations have happened because people had leverage, pushing up. And I think USDC got down to about 88 cents. I don't know how many positions were on where people had the assumption that USDC was going to be $1 and now it's not. Whether that's actually blown out a bunch of liquidations in the DeFi space. I need to look more into that. But kind of funny that Tether dominance is pushing higher once again. The thing just won't die. Now, in terms of non-zero addresses, this is obviously a good example for what's the kind of conviction of this thing. Are investors changing their behavior and the like? If we look at USDC, I mean, there's been some wallets that have emptied out, but we're talking about 30,000 wallets. But that's out of a total of 1.6 million. So we haven't yet seen what I would call a mass panic. I think the vast majority of the market kind of recognizes that this will probably be a temporary event. That's at least the current scenario. But what that does mean is that if it does deteriorate, there's potential energy there for things to get worse because people haven't necessarily actioned anything just yet. But right now, I think the majority of the market is kind of sitting tight and saying, I think this is probably going to blow over, at least as it refers to here. Now, some interesting dynamics, stablecoin supply on exchanges. In terms of the aggregate, obviously this is a monumental and massive decline in stablecoins and exchanges. This is primarily driven by BUSD, right? So BUSD is seeing quite a bit flowing out. Let me just turn off BUSD, and BUSD is M4, so I'm just going to times that by 0. So we're just going to remove BUSD to look at the overall flow here. What you can see is that, over a non-trivial period of time, since November, since FTX, really, we've actually seen USDC climbing and it's up quite substantially. So we've seen a lot of USDC flowing in, but this doesn't necessarily relate to recent history. This has been a bit of a trend that's been in play for some time. Meanwhile, Tether is actually seeing significant outflows and accelerating at the moment. I find this fascinating because this to me is telling me that Tether is being viewed in a similar light as like the most trustless stablecoin, even though it's absolutely not trustless. And personally, I would not hold Tether. Because I do believe that there's probably several question marks out there, although I do find it hilarious that it just continues to outlive most things. I do find it very interesting that people are moving back towards the most Lindy stablecoin, even though it's got a shadowy past and probably a shadowy present. Nevertheless, very, very interesting dynamic. On the whole, you can see in the aggregate, we're pretty much sideways, right? Chopping sideways. What's coming in by USDC is going out in Tether. Very interesting dynamic, one to just kind of see and play out how this actually evolves. You can see that there was obviously growth through the bull, and then they started to diverge. I mean, Luna and 3AC blew up. There was a bit of reduction in overall dominance for Tether. If we go back to our dominance chart, but interestingly, that Tether is preferred to be held in a self-custody, so to speak, situation right now. Kind of interesting. Net flow in and out of exchanges for stablecoins. So you can see we've had predominantly outflows for some time, but there has been, what is this? $447 million in inflows for stablecoins recently. And basically there is a bit of a panic that's going on at the moment. And as we could see before, this was primarily based on USDC flowing in. So it really does show again that USDC in, Tether out. It actually is a swapping mechanism that's going on. So some of that capital is in fact not leaving the market. A great deal of it is essentially just allocating to a different coin. Now, what will be interesting to watch is over coming days when USDC opens up redemptions, watching how much USDC's total circulating supply changes. That to me is a very, very important indicator whether we're seeing capital outflow. What we kind of don't want to see is mass capital outflow. We don't want to see people bailing out at scale. So watching the USDC supply or net position change or whatever you want to use to track it, in my view, is an important one to pay attention to in coming days and weeks. And we can see here, this is the exchange net position change for stablecoins. We're pretty much at post FTX levels in terms of overall stablecoin outflows, $4.9 billion in a month. And again, a lot of this is driven by BUSD. Maybe I will just drop BUSD once again, just so we can... So, shows you here why it's important to actually look at these charts in sequence and just do some checks and tests here and there. I've just removed USDC and you can see that we've gone from an outflow to an inflow. So overall, it's actually 2.3 billion flowing in, which actually goes to show you how significant the outflows are of BUSD because it's offsetting that behavior. So very, very interesting dynamic. We are seeing net inflows of stablecoins to exchanges when we remove BUSD. And it shows you how dynamic this stuff is, right? BUSD's got its own problems going on with Paxos and the SEC charging it. And then now we've got USDC. All these puzzle pieces are moving separately. So you do kind of have to just think about what is the market structure that's at play here and what does it mean moving forward. So one thing I do want to just take a snapshot of here. Actually, I can probably skip this one and go straight. In fact, no, I do want to show this chart. This one here is one that I think is quite interesting and probably important one to pay attention to. In fact, these three. This one here, I think I've talked through this before, but I'll just give you a snapshot again. This is looking at all exchange flows. So inflows and outflows for Bitcoin and Ethereum. In the numerator is Bitcoin, inflow plus outflow. In the denominator is Bitcoin, inflow plus outflow, plus ETH, inflow plus outflow. So the way to think about this, total exchange flows, how much of the total between Bitcoin and Ethereum is Bitcoin's Bitcoin dominance relative to the two majors. Up means, or uptrends means Bitcoin dominance as the liquid asset is growing. There is more USD value in Bitcoin flowing in and out relative to ETH. So we continue to see this kind of grind and push higher, and it actually appears to be accelerating just a little bit. And we can actually see this in our volume dominance on perpetual swaps. Bitcoin continues to grow in dominance, and we're basically flat in terms of open interest, a little bit to the upside. So the takeaway here, but also note that open interest continues to be dominant Bitcoin, 61%, 38%. Whereas volume actually came in and connected. We talked about this before as kind of this meeting of liquidity. Both assets were large enough. There is a return back to Bitcoin in terms of dominance overall. So really the way that I'm thinking about this, there is a bit of a flight to safety at this point in time. The knock-on effects, I mean, USDC depegging, I don't know what this means in terms of regulatory issues. Does it make it increasingly likely it's security because price is now not necessarily $1 and it's kind of reliant on the actions of others? I mean, I don't know how all this stuff works. What I do know is, and I just sense and feel, is that, like, personally, I feel like DeFi, even though it probably is hanging in there just fine and everything is working as designed, if there was a time that regulators are going to come out with a hammer and start belting at nails, even if those nails are your fingernails, now is kind of it. So right now, I'm just a little bit cautious about anything that's not Bitcoin, right? And you know, that's not coming as coming from me as a Bitcoiner. That's coming from me as being like, man, there's some risk out there right now. So at the moment, I'm just seeing a couple of things, a couple of trends that just, to me, are just hinting at like a bit of risk off. And that's probably bearish in general, right? We looked before, capital outflows, probably bearish. Dominance, move to safety, probably bearish. Fundamentally, I mean, you know, Chancellor on brink of second bailout for banks. This is why Bitcoin exists. This is also why Ethereum's building out a DeFi system, although it needs to prove it's DeFi at this point in time, because MakerDAO and DAI, for example, are in a bit of trouble because the peg has broken. So anyway, it's just something to pay attention to and something we will track over coming weeks to see whether this kind of evolves further from here. I think we probably covered a lot of those. So with all of that said, the last thing that I want to touch on is kind of the realized profit and loss, the behavior of basically the Bitcoin side of the equation, how are investors actually behaving, what is the kind of overall trends. So I got a couple of metrics here, and I'm really going to focus on two elements. One is realized profit and loss. It's just a fantastic tool when it comes to sentiment and the like, and also look at supply. We looked at long-term supply the other day, and I really want to just dive in just a little bit further on that. So here we are looking at all sorts of SOPR variants. I've got a SOPR, which is kind of the general market. Consider this like the realized price. I've got the entity adjusted version of that in orange. I've got our short-term holder SOPR in red and our long-term holder SOPR in purple, which is currently turned off. And you'll see here why that is the case. We'll come back to that. So for all of these metrics, you'll see that the pattern is typically quite similar, they tend to behave much the same. Now, as you can see on the right-hand side, we have a little bit of a what I would call waterfall style pattern. Now, when do we typically see waterfall style patterns? Well, here's one before March 2020. Here's one as we just before Luna starts to implode. Where else have we seen one? I wouldn't quite say this one here, but we are seeing this kind of waterfall style behavior. Now, let me just go back and have a look at the previous bull market, because we do see these events take place in bulls as well. You can also see these waterfall style behaviors in bulls. They kind of curls right in. Maybe I'll just zoom right into the 2017 bull because it's just a great example of how this looks. What is going with my scale? Okay, so you can see this kind of waterfalls and a nice little undercut. But note in a bull, the degree of undercut is relatively small. Now, the reason that these happen is that people who literally bought the top or from the previous cycle in our current circumstance are essentially selling the absolute bottom. So you get these kind of waterfalls down as price collapses. People eventually sell at the lows. Let's go back across to March 2020. Here you can see there's a bit of a continuation, and this thing really got some depth, right? Very different to back here in 2018. This is true bear market behavior. We're underwater, and the thing just caves in and collapses. 2019 was a bit different. You could argue this had some bull market. It was a transitional period, much more relevant to where we currently are. We got some upside. There was a bit of profit taking. Then we had a bit of a chop around, and then we had our waterfall capitulation style moment. If we go back over here to 2020, where was that lunar event? Here it is here. You can see that really this is a bit more bear. We had kind of a transitional period, I guess. This was a little bit 2019-like. We had the initial sell-off. We kind of chopped around. But really, it was this lunar event that put us into the bear. This period here, where we're kind of chopping up against the underside of one, much more similar. In fact, basically identical to 2018. So where we are at the moment, we've had that FTX capitulation event. That was several months of pain. We've got that first momentum to the upside. Let me just pull in just a little bit more so we can see where we're at. And what you can see is that we have now broken down below a value of 1. And in terms of the magnitude of these things, we're talking about 3%, 5%, 2.5% losses. Nothing compared to the bear market territory. Much similar to what we saw during those more bullish markets. So it is possible. It is certainly possible that this thing here undercuts, which we've got, and then bounces. It is very, very possible that this is kind of the flush out of sellers. Now, it's hard to assess that. And we're going to look at this from a couple of angles. It is hard to assess that. We do need to kind of, this is part of the game of risk, right? We can see these dynamics play out over and over again. And we have examples where the thing just keeps going March 2020 style. And we also have examples where it looks like a bull market, where we actually get the flush out and then the bounce. So I'll actually come back to our realized profit and loss dashboard. So to kind of frame that up, well, who is doing the selling? Who is actually doing the spending here? Maybe I'll just bring in long-term SOPR. Long-term SOPR continues to be underwater. So the coins that long-term holders are spending continue to lock in losses, right? So they're still underwater on most of their spending. So what that tells me is the people who are spending in profit are mostly short-term holders, at least previously. And where we are at the moment in terms of that undercut means that we've probably got a combination of long and short-term. So I want to understand what's the mix of long and short-term holders. And just as a bit of a frame of reference here, long-term holders I expect to be at a loss because they're all trapped, right? Most long-term holders are trapped in the previous cycle. Short-term holders are mostly down here at the lows. So if there are short-term holders spending in loss, when did they buy? Recently. They bought the local top, right? This is why this part is important. Short-term holders, if they are spending in a loss, which they primarily are at the moment, right? Let's actually zoom in right to our short-term holders. Short-term holders spending in a loss, the only place they could have bought is in our current rally because all of this stuff 5 months ago is in profit. So it's actually really hard to be a short-term holder and be bailing out in a loss. And this is why this gives a bit of credibility to it could very well be a bounce because a bunch of people who recently bought are panicking. That's the kind of time when these things actually bounce because they just get offside and that creates the FOMO bounce the other side. Now, as I said, there's about a 50% chance this goes in both directions, but I do want to just kind of paint the picture that during this doom and gloom, we do see these things play out on a regular basis. Long-term holder supply, we were talking about this thing pulling back the other day. Well, it has stopped pulling back as banks are failing and stuff's getting chaotic. And remember, Bitcoin doesn't stop overnight, doesn't stop over the weekend. We are looking at data that continues to plug along, even though we've got banks failing. So this is kind of what's happening on Sunday while the banks are closed and the market's kind of preparing. Bitcoin is our index for what Monday morning may look like. This to me shows me that there's not many people who are like, Bitcoin's definitely going to 12K now. I'm not seeing that just yet, right? It's kind of an interesting dynamic. So now we're looking at supply sent to exchanges, volume to exchanges. Orange is all, red is short term, blue is long term. Now blue, you can see, this is a piddly little thing, right? Basically nothing. In terms of overall coins, and actually it's cooling off in recent days. There's not much going on. Long-term holders are actually sitting tight. So most of the coins that are flowing around are still top buyers who are kind of panicking, which is kind of the status quo, I would say. It's not a change in conviction or behavior patterns here. This is kind of what we've been chewing through over recent weeks and months. Instead, what we are seeing is short-term holders are the primary ones doing the spending. You can see that the full-scale chart is pretty much a primary aggregation of what's going on with short-term holders. Short-term holders spending in loss primarily are the ones who are capitulating out. It's kind of the people who bought the top recently. Kind of an interesting dynamic that we're seeing playing out. So moving on, looking at the full scale of realized profit and loss, you can see that this is a non-trivial capitulation style event. Now remember, this chart here is in dollar terms, so it's going to scale with each cycle, but we are at a similar dollar level to March 2020. This is a non-trivial kind of could be, maybe, possibly, just a little bit, could be a washout type behavior. This could also continue to go like March 2020. Like just be really careful. This thing could go both directions. You can see we do have a non-trivial uptick in realized loss, but note that everyone who's in profit is not spending. To me, this feels higher conviction. In terms of a dip, there is a higher conviction positioning or the way the market's behaving to me right now, at least for Bitcoin. I don't think Bitcoiners are concerned about this SVB thing. So this is kind of the takeaway from at least from the Bitcoin side that I'm seeing. Realized profit and loss has well and truly dived back down into the red, right? So again, this can happen during these kind of exit transitional periods. It takes time. 2019, good example. It takes time after a long bear to get back out. You need multiple retests and, people are still got a bit of PTSD. This could be a PTSD dip, right? A lot of people are going to get very bearish, and I wouldn't be surprised if the bears actually turn out to be wrong in this instance. Be prepared for both, but I really wouldn't be surprised. SOPR overall, you can see, this thing is just cratering, right? This is a deep flush out. It's a significant event, but as I said the other day in that video, there's a lot of nasty stuff happening. And we're at 20K, right? After a 50% rally. If this was happening and there was no bank failures, this would look like a normal correction, right? It's not like I'm not seeing 18K. If it was 18K, this whole discussion would probably be a different story because we essentially would have lost some range lows and we would have been back down into the FTX range. And if we get down there, then clearly this thesis is probably incorrect. Nevertheless, I'm kind of surprised that we're only at 20K given the magnitude of some of this chaos. I think we've looked through most of these. Yearlies don't particularly matter. And here's the last one I want to just close on. Sell side risk ratio. This one here is basically looking at of all of the realized cap, the total market size, how much realized profit or loss is taking place. And low values basically mean very, very low volatility. There's not much value changing. That means that the coins that are being spent came from prices that were pretty close to where we currently are. That's where we currently are. There's like most of the coins that have significant profit or significant loss, they're kind of sitting tight. There's not too much volume moving around. It's a pretty quiet period right now. So again, it to me speaks a lot more to a kind of higher conviction type behavior. When do you get low values in this ratio? Well, 2019 is a good example. And note here that most of these low values come before some kind of volatility. This transitional period is where we typically see these. It speaks certainly to we're more probably in that transitional period. I think the bear could be behind us, but this transitional period takes time. could be 12, could be 18, could be 24 months. But the pits of hell that we came from with FTX still kind of feels like it could be a rearview mirror phenomena. Same here. We spent a lot of time down here during the exit in 2016. This transitional period speaks to a low amount of realized value. People are still hanging onto their coins. They recognize they got in pretty cheap. They'll take profits here and there. A few people who bought the top in the previous cycle exit. But for the most part, it's a waiting game. That's how I kind of see this kind of thing. So anyway, there's a lot that still needs to play out. We're still in a very, very interesting and dynamic environment. Be very, very cautious. Be very prepared. Really do have a view of 50-50 in both directions here. But my gut feel when I kind of look at a lot of this stuff is that it may actually be something that contains itself faster than people expect. And we may be back to kind of regular programming of rate hikes and blah, blah, blah. Now, what I am saying, this event with SVB, you may have heard the term from the periphery to the core. Back in May or June, I can't remember, we saw the gilt market in the UK blow up. We've seen, I can't even think of good examples at the moment, but we've seen kind of G7 countries have issues here and there. It's starting to happen in the US. The kind of the rot is starting to get closer and closer to the center of this thing. And eventually this thing's going to show up in the US Treasury market, is my gut feel. So, we've got problems, but I think we're just kind of seeing more building. There's going to be a suddenly phase, and I think that's getting closer and closer. But I also think we may just have one more kick of the can, and we just kind of, everything goes back to being, maybe it is stable, and then we'll find out how this plays out. But, mathematically, they've got to print the money to fix this hole at some point. At some point, the chickens are coming home. And the Fed's the only one with a balance sheet big enough to feed all those chickens. So anyway, hopefully that's useful. Again, be very, very cautious. But what I'm seeing in terms of conviction, I'm impressed. I'm also a little bit impressed in terms of price action holding up. So it's just a couple of pieces of evidence there that's probably contrarian to what you may see out in the wild. But hey, where's the fun in being, saying what everyone else is saying? So anyway, hopefully that's good. Hopefully this finds you well on the weekend. Sit tight. This whole thing, eventually this market's going to recover. Bitcoin was designed to survive this. This is what it's all about. We're in a tough spot, but this is what it's all about. So sit tight, hang in there, and I'll see you in the next one. Cheers.